Good morning, everyone, and welcome to our third webinar of our annual fraud month here at ARC. Today we are being presented on the credit risk monitoring solutions from Actuary. And with us today is Paul, who will do an introduction of himself, and Chiara. As always, Cornelia is here from ARC, Director of Revenue Integrity, and my colleague Doug will do a quick brief introduction of himself before we get going here with Paul and Chiara.
Hi, thanks, Cornelius. I'm Doug Nass, and I'm the Director of Fraud Investigations at ARC. I've been doing this fraud stuff for about 27 years. So you can't talk about payments without talking about fraud and the other way around. So it's a good synergy between us. So on to Paul and Chiara. Thank you.
Paul, just before you get started there, just some housekeeping. For questions, of course, use the pane on the right, and there's a section there with questions. Click on that, and please type in your questions so we can have an engaging session here with everyone. Thank you very much. Over to you, Paul.
Thanks, Doug, and thanks, Cornelius, and great to be back at the ARC Fraud Month webinar series. My name is Alfen, and I thought it was maybe not that early yet, but you know, to wear my Christmas sweater from this picture. So before we jump into the agenda for today, Chiara, welcome, and maybe a quick introduction.
Thank you, Paul, and hello, everyone. As I said, I'm Chiara. I'm a Senior Vice President for Market Development Travel at Mastercard. Happy to be here today, and please, as I said before, we love to have engaging sessions, so please feel ask any question during any time.
Mm-hmm. And although this is the ARC Fraud Month, actually this topic is about credit risk, so we're not talking about chargebacks based on let's say fraudulent behavior of people that make bookings for airlines. We're talking about credit risk. So I would like to take this opportunity first to do a bit of an introduction to the topic and give you some background before Chiara will take over and will shed some light on credit risk in the travel space for airlines from a card scheme perspective, from a acquirer perspective. Before, like I said, we go into the details, a bit of an introduction. So my role is I'm an independent consultant in the travel payment space, and I look at the whole end-to-end value chain from pretty much from a helicopter view holistically, and I try to connect the dots. And one of the basics basically of accepting payments for airlines, if it's in the direct or indirect channel, and for payments with cards, is that it introduces a credit risk and an exposure. But where does it come from? It comes basically, if you look at Visa and Mastercard for the purpose of this meeting, from the fact that the card holder is always protected by the card issuer and by the scheme in case of non-delivery of service. And if you look at the participants in the payment transaction lifecycle, the diagram you see on the right here on the screen from the Airline Payments Handbook, by the way, you see that on the left-hand side, you see the cardholder and the issuer. And basically, the issuer takes responsibility for payment by the cardholder. If they, in the end, do not pay, the merchant should not have any problems with that. So they are liable for potentially non-payment of the cardholder. But on the other side of the scale, on the acceptance side, you see that the acquirer basically takes that role when it comes to delivery of the service from the airline, in this case, of the travel agency, in case the service is not delivered, the product is not delivered, and it won't be delivered at all, for instance, because the merchant stops operating, then the acquirer is responsible for funding back that money via the payment scheme back to the issuer, and the issuer back to the cardholder. So there's two liabilities here, on the issuer side and on the acquirer side. What is the exposure then? Basically, in the worst case scenario that an airline stopped operating, not if they go into Chapter 11, if they keep on operating, and if they scale down maybe the operation, but they still honor most of the tickets. But if they all of a sudden stop operating, and we've seen some cases here recently in Europe, for instance, and Chiara will elaborate on that, the airline stopped operating. Tickets have been booked way in advance, like up to a year in advance. airlines. And with the pandemic, by the way, also maybe some tickets that were even booked before that. And these tickets are then basically worthless, and the cardholder can then reverse that transaction and ask the money back from the card issuer, who will then go back to the acquirer, and they will basically debit their account and will receive the funds back. But the acquirer is basically covering that risk. You know, what's going to be reversed in case that happens, and therefore, how do we first of all assess the risk that's going to happen? But secondly, what's the amount if that situation happens that's going to be reversed and that needs to be covered, you know, by a collateral, by a holdback, for instance, so that the acquirer is not going out of pocket in those kind of situations. So that's on a very high level the situation that we're talking about. That was always already, you know, a big topic before the pandemic. Not every acquirer is set up, is capable, is willing to deal with this very complex matter. But since the pandemic, we see that the acquiring community has become even more hesitant, you know, to take on this risk, to deal with the day-to-day monitoring, and to accept payments on behalf of airlines. And the purpose of today is also to explain that, you know, we as a community, we need to make sure that there's a transparent flow of data, there's knowledge about this topic, and that there's sufficient confidence in the value chain to basically create enough acceptance to meet the returning demands. We're nearly back on 2019 levels, so we need to have these acquirers in the ecosystem to deal with these transactions. Otherwise, the airlines will really become stuck in the process. So, like I said, there are basically two sides to the risk coin. One is the likelihood that this bankruptcy, this airline stopping operating, or this travel agency stopping operating happens, and then the second part is actually, you know, what is then the amount that's at risk? What's the amount that's going to be reversed, right? What we're going to see later during this session is the Actuary tool that actually collects all the data, validates it, and then calculates based on scheme rules, on industry rules, on best practices, calculates what at any given moment the risk is, the amount is that will be reversed if that situation happens. On the other side of the coin, there is the likelihood. So, and that's a different exercise. That's a credit scoring exercise. There's typically dedicated airline acquirers. They have a team of people that actually works with a lot of data sources to gather information and to do an end-to-end assessment of what the financial health of the airline is currently, but also towards the future. And they look at very many things. And in this word cloud, you see a lot of angles into this. If it's regulations, if it's the country, for instance, where the airline is based, and the credit score for that particular country, but obviously also the financials, the balance sheet, the kind of business model, the fare, the schedules that they have filed, the fleet age, the fuel prices, and how they hedge the fuel to deal with fluctuations in fuel prices. Very many different variables in the equation, and it's a very complicated task for the acquirers, but also for, and Chiara will maybe relate that as well, to the schemes to actually do a proper assessment on a regular basis, on a quarterly basis, of the financial health of the airline. And then basically the outcome is, you know, what's the chance that, you know, in the short to mid-term, this airline will enter into these kind of situations that, you know, these transactions will reverse, because that's, again, what needs to be covered. As part of the work I do in the industry is also try to break this down, try to simplify all these factors that play a role. And I try to do that with infographics, typically one piece of A4 piece of paper with a lot of details on it, but which would hopefully help to establish, you know, create awareness about, you know, what are the factors that play a role, how does the process work, you know, who's playing what role, and that kind of things. And I think what I've recently put together is this infographic, and at the top you can see here that it's, if you break it down to the very simple, the most simple setup, it's like a booking is made, a payment is done, card is authorized, card is captured, And it could be same day, next day, but it could also be 3 months, 6 months, up to 12 months in advance. And typically the airline gets paid, the full amount after the tickets have been issued, but then the service still has to be delivered. And that could be one leg, could be multiple legs, but there's definitely a time delay between the payments being processed and actually the service being fully delivered. And the liability, the exposure is pretty much the time between the payment and the last leg of the journey, and so that the whole service has been delivered, and therefore the reason for a chargeback for a reversal is gone. There's been a lot of recent discussions around, how did we end up in this situation? Because airlines are presented with holdbacks, with collaterals, with bank guarantees. They cost money, they are painful, but the fact that airlines already since many years sell, especially in their direct channel and also through the travel agencies, they issue tickets and they are allowed actually to capture the funds based on IATA exemption. They are allowed to actually process the payment at the time of booking, at the time of issuing of the tickets, and not at the time of actually consuming the service. Not like you check out in a hotel and you pay them. You pay in advance, and that has a lot of historical reasons for legacy processes, but also, for instance, the fact that, and if you talk about the area where I live here in the Netherlands, in Europe, you basically have a lot of promotions in January for the summer holidays in July, August. That means that yes, the fares are lower, but you also actually pay already like 6 months in advance, and that money is then already paid to the airline, whilst they only have to deliver the service 6 months later, right? So these promotions play a role, and there's other aspects around seasonality, but also due to the pandemic, for instance, the fact that bookings were canceled, there's voucher issues that were rebooked, they were rebooked for the next summer holiday or for in the next season. So it also stretched the time between the original booking and payment and the actual delivery of the service. Like I said in the introduction, a lot of it comes from the cardholder protection rules from the schemes. They protect, in case of faulty products or non-delivery of service, the cardholder, but that also means that that's put on the plate of the acquirer to then enable that process, that reversal process, especially if the airline is not there. On the other side, airlines are looking into also alternative forms of payment, accepting payments that are guaranteed, that don't give that cardholder protection, but therefore also cannot be reversed, like a bank transfer, or open banking, or an account to account, or some of the wallets, for instance. And so in the end, credit risk needs to be an integral part of the payment strategy of an airline, and it needs to be a mix of working with multiple acquirers, proactively looking at, okay, what is the time between booking and departure? How can we best manage the collateral? What kind of other variables can we bring into the equation, like alternative forms of payment, or maybe even take payments later than at the time of booking. Many things that play a role, and hopefully at the end of the sessions, a lot of these boxes will mean something. But here at the core, you see the Actuary platform, and that's the main topic for today. Because I think what is one thing that we've learned, that there was just a lack of transparency. There was not enough data, not rich enough data to share between the different stakeholders to create these overviews of what exactly is going on and how to properly deal with it. And pre-pandemic, that was always known, but not really seen as a priority. I think the pandemic caused it to become a priority, and that's how the Actuary product was brought to market, and it's now in collaboration with Mastercard rolled out globally. But it's all about data sharing. It's about making it more transparent and making sure that the trust remains, or is being brought back into the value chain, so that there will be sufficient supply to meet the returning demand.
Paul, we've got our first question in from the audience.
Wow, that's good.
All right. Yeah, so the question is, what are the differences of levels of exposure for acquirers offering servicing airlines versus hotels versus agents like OTAs, tour operators, versus a fourth one, rail operators? So we've got airlines, hotels, basically the bigger, the OTAs, tour operators, and fourth, rail operators?
Yeah, very good question. Valid question. I think there's one part is the time between booking and the actual service. That's one, but that's obvious. But the other one is, I think, it's if it's direct sales versus indirect sales. So if it's B2B, if there is a pay-in which is decoupled from the payout to the supplier, that introduces also protection mechanisms. And maybe Chiara, Mastercard plays an important role in the process. Maybe you can shed some light on that.
Yeah, I think all of them that you mentioned, I think, are travel merchants, I would say. And what is key is that they need to be the merchant of record for the final, I would say, for the final cardholder. So that's independent of what they are selling. They are the merchant of record, so there is a risk associated, okay, with that transaction. Then, of course, what also they will analyze is the time gap, as Paul said before, between the time of purchase and the time of consumption, eventually. This specifically, when we are addressing now, eventually direct sales in the web page of eventually of the airline, of the cruise line, and so on. One additional element of risk, definitely for acquirer, is when they are eventually onboarding a travel agency, because the travel agency, of course, is active. When a travel agency is acting as the merchant of record, they are responsible, if you don't, liable for that transaction in front of the consumer. So they need to make sure that the travel agency is paying with a protected mechanism, if you want, the travel supplier. They have a commercial agreement in place that if there is, for example, a trip cancellation, the money will flow back from the travel supplier to the travel agency, and from the travel agency, of course, to the cardholder. So I would say the only difference is definitely with travel agency, where most probably the acquirer will require travel agency to tell them how they are paying out the different travel provider, because not all the form of payment today will provide, I would say, the certainty and the protection. Thus, that is a critical part.
Yeah, I think another aspect of that, Chiara, is that typically the acquirer is also quite interested in the concentration risk. What's the spread of the bookings over the individual suppliers? And if, for instance, it's skewed towards a couple of suppliers, and if one of those suppliers goes bankrupt, that also disrupts the process, and it will cause the flow to be reversed, right? So there's definitely a couple of other factors that play a role from a travel agency perspective compared to any direct sales. So like what Chiara said, a cruise line selling their own stays or their own trips, or a hotel taking a prepayment, that's of course important, a prepayment for a hotel stay, which is non-refundable, or and then in case the hotel would not deliver the service, can also be reversed. So that is pretty similar to the direct airline case, but the travel agency, travel intermediary, B2B, if you like, bed banks, that introduce some other variables that play a role, and the way that the credit risk is calculated is definitely different there from direct sales from an airline, if it's where they act as the merchant of record, right? So and it could still be a travel agency transaction, but where the airline is the merchant of record, that particular set of rules applies. Okay. Let's continue. And I'm not going to go through all of this, but this is recently I created this overview of accepting card payments from an airline perspective, being the merchant of record. What does it cover? What does it contain? What are the factors that play a role from the airline perspective, from the cardholder perspective? But as you can see here in the middle of the top as well, is that credit risk plays an important part of that. Is if you want to onboard with an acquirer, if you want to have a warm and productive relationship with an acquirer, you need to share this data. And also, cost is a big topic. A couple of reports we have published over the last week or so. IATA was involved in that, McKinsey. And for instance, the cost for collateral, so to cover that risk is also something that needs to be added up to the cost for processing the payments, for refunds, for chargebacks, for fraud, and for other steps in the process flow. So that's some more background. And So knowing that, this is an important item that plays a role in the end-to-end relationship between the airline, the travel agency, and their acquirers, schemes, other schemes as well, by the way, because they pretty much apply the same methodology. Let's go to the TV risk monitor, Chiara.
Yep.
I'll hand it over to you for an introduction and then some background from a scheme perspective.
Yeah, definitely. So let me take you through what you are seeing this slide on the right side. It's a transaction where you see a consumer, you will see an issuer that is issuing the card, and you can see a consumer that is a cardholder that is doing a purchase over a travel merchant. You will see here that travel merchants, airline, hotel, cruise line, etc., are referred, as well as you can see it here, deferred delivery merchants. And this is the term that we use in our guide or in our rules, because unlike other merchants, like Paul explained before, the time between the purchase of the service and the actual use, if you want, of the service is happening later on. Okay, so just think about an airline ticket. You book and pay today, but the actual service eventually will happen in 2 months' time. Now, for this reason, acquirers, when acquirers are onboarding travel merchants, need to monitor very carefully this time gap. That basically will, it is about, I would say, the risk exposure. And they need to make sure that in case of any disruption, let's think like a flight cancellation, they can fulfill refunds or chargeback obligation to the final cardholder. Think as well as what happened during COVID that as well Paul mentioned before, where merchant and acquirer had not only to manage massive refund and chargeback claim, but in many cases, and I would say correctly, vouchers were offered as a compensation for canceled service. But these vouchers were intended to work kind of a type of credit system which could be used later on for a set of period, if you want, later on. But this was also meaning to increase a liability for the whole ecosystem. So as you can see now on the, I would say, left side of the slide, the industry has been facing some difficult situation in the past in terms of money value liability or even default of some key players. Now let's see, okay, because it's not only, I would say, an issue for acquirer, but we understand as well that it's an issue for travel merchants. So Paul, sorry, if you can move on to the next slide.
Yeah, and maybe to add to that, Chiara, that it was interesting to see that during the pandemic, actually the number of new airlines that started in the middle of the pandemic was actually, I think, a record setting, right? So, and these new airlines also, by definition, have a challenge, convincing an acquirer to work with them because they don't have the financial, track record. They only have plans, they have funding, so there's not a lot to offer. And by introducing, what we'll see later on, actually, these new airlines can also work with existing acquirers and make a start. But let's continue that later on. Just come screen here. Here we go.
So what I was saying that what is the industry facing and still does some of the challenges. Okay, on the travel merchant side, as you can see here. There are situations where maybe existing acquirers are not willing to onboard and accept additional volume, or they are requesting collateral or an increase of collateral, or there is no flexibility, okay, for a travel merchant to negotiate payment terms, and there are very difficult onboarding process. Or even there are some situations where there are no acquirer active in certain markets, because definitely, as most probably, if there are airline in the audience, they will know that not all the acquirers are acquiring today travel merchants because of eventually the risk, and they don't know how to manage this risk. On the other side, the acquirer, most probably the main pain is really to lack of the real-time view, understanding of the booking and service data and the risk exposure, the increased liability eventually due to voucher that happen. and the higher need of reporting. And we can say that one of the main consequences of all this for the travel industry has been definitely the need of a closer working relationship between, I would say, the entire ecosystem. I would say travel merchant, acquirer, but even definitely even the scheme. And that is why, and Paul, if you can move on to the next slide, we have been partnering with Actuary to provide better insight to support an healthier travel ecosystem. So basically, we have created this tool that you will see later on, where by combining payments and real-time booking data, acquirer can access the tool, will have greater visibility on the transaction, and then they can put eventually the right mechanism in place to improve payment terms, manage the payment in a more easier and accurate way, improving the risk confidence and the needed protection. But also, we hope that with this tool, we are also increasing the appetite of acquirers to onboard more and new travel merchants. And I think this is, at the end, what we all want, an healthier ecosystem.
Yeah. And Chiara, I think it's by the way an agnostic tool, right? It's a brand agnostic tool, a scheme agnostic tool, so it's not only for Mastercard transactions. And I do remember, it was Cornelius or Dark that mentioned, and maybe the gents can confirm that also we look at the community of ARC airlines, that especially foreign airlines struggle, for their US HC sales also to find acquirers, because the limited number of acquirers in the US that is actually willing to process for airlines. In most cases, is not very confident in working with let's say more exotic foreign airlines from their perspective. So I think the tool like this can really take out that that discomfort, if you like, and make it completely transparent, and for instance trigger the payout, the remittance to the airline only based on a proved fully flown status, for instance. So that's definitely something that what also
I've been in the industry, in the travel payment industry, over most probably 25 years now, and I've been working as well as an acquirer, and I can tell you that from an acquirer perspective, to invest in a tool themselves, just to, I would say, to track, I would say reconcile and monitor, the time gaps and so on, is quite a huge investment for, if you want, a subset of the portfolio that is only dedicated eventually to travel. So the idea of having this tool in the industry, it's really to support acquirer by you don't need to develop anything internally. The tool is there, and to gather and to get a greater confidence. We will see as well later on a specific slide that will also benefit the merchant, and this was also key for the merchant. So on the acquirer side, what I will have, this is I would say a slide of the tool, a greater transparency. They can see the merchant risk level exposure. They can search for specific transaction, and then they can have the schedule different reports and alerts, and also rules. So this is, I would say, this is important from an acquirer point of view.
Yeah, and maybe to come back on your comment about let's say do it yourself, investing in it yourself as acquirer. I think we all realize that this is very much a very specific topic, right? And it needs really in-depth understanding of the industry, of the payment processes, of the stakeholders, of all the elements, the word cloud that I showed as well. That play a role, and credit risk teams at acquirers typically deal with multiple verticals or multiple types of merchants, and to build up and maintain that understanding, that knowledge, can be quite difficult. And then also to build and maintain a tool, making sure that you're always up to date when it comes to scheme rules or IATA resolutions or best practices, or how does the industry work with it? What kind of types of collateral are available? I think to have that all in kind of a centralized environment and have the data also flow through one single hub and make it available to multiple acquirers, to multiple collateral providers, etc. I think that's where a lot of synergies can be achieved, and that's where it's always good to compare. If you have a small portfolio, if you're a large player, where what's the best match with your requirements. Okay, I think we saw the screen of, yeah.
Paul, you can move, yes, to this slide. I think it's important as well to see what the acquirer will see. It's really an interactive view of past, current, and future data with, I would say, important, for example, on the airline side, the flights that are flown, open, the refunds, the voucher, and the chargeback on medical portfolio. It's very important as well that eventually, as a scheme, we might differ in some of the rules on the calculation and so on. The tool is taken into account on the different, I would say, on the different chargebacks at timing as well, to calculate the different exposure eventually for the different scheme or the different form of payment, because we're talking here about scheme and card, but eventually some of the acquirer can also acquire for alternative form of payment, and the tool can be used as well for this.
Yeah, because in the end, any form of payment that protects the consumer, and PayPal is an example of that. But I think in case of buy now, pay later, we've seen also examples where the airline is paid instantly, and the consumer is protected by the BNPL provider in case the airline in the end does not deliver the goods. So they would also be either using a virtual card to protect themselves, or they need to make sure that they also do the proper risk assessment and monitor their exposure and have collateral, have a coverage in place that if that happens, that they do not go out of pocket as well. And maybe it's also good to mention, Chiara, that we talked about transparency, that the airline, the merchant, the travel agency, whoever uses the tool will have the same view as the acquirer. They see the same numbers, but they see that across their acquirers, across their payment providers, and they can also already, let's say, anticipate on if they meet their maximum amount for a month, the cap, this is called, or if they need to route transactions to another acquirer to make sure that they stay within the agreed credit risk conditions. And for the acquirer, they will see their merchant portfolio, but only, of course, their volume, and they can have, I would say, proactive, transparent, constructive discussions in advance. Correct. Or while things happen, and they can have like alerts set up with that if the exposure, the amount that's at risk goes either above or below a certain threshold, that they already get an alert saying, well, maybe it's good to have a look at it now and to adjust some of the settings, because in 1 to 3 months, you will hit this certain, certain limit. And I think in practice, historically, at least my experience of also 20+ years in this business, is that it typically happened after the fact and then caused panic, because all of a sudden, the money was held and not released anymore. And I think that there's a lot of room for
yeah. And I think, Paul, sorry, if you, we will come back to this one later on, but if you go to the next one, I think really, the following one, sorry, next one.
Yeah, sorry.
I think it's really, what are the benefits really to the travel merchant accessing, I would say, accessing the tool. Sorry, next one, and then we come back to this one.
Yeah.
What is really the travel merchant? What are the benefits for travel merchant? So definitely for a travel merchant, there is no need to periodically submit customized report to the different acquirer. Okay, they can co-negotiate different, better settlement and collateral term with acquiring partners. And I also want to say that on this, we are really working closer, I would say, to acquirer to also offer, I would say, add-ons, if you want, a solution that can be attached to the tool, like a kind of insurance eventually, or as well some trust setup, so that if requested, the collateral can also be optimized or minimized. They can also visualize the sales and volume per acquirer. So from an airline, they can see all the sales and volume per acquirer, and they can also check when the payment is due and when will be due. This is very important because we know that in certain cases it's a D+1, D+2. In certain cases can be for certain transaction, the payment will be done from the acquirer after certain, maybe when the first leg of the transaction, the ticket is flown, and they can, reconcile and control on the tool all this information. And they can view, I would say, also their risk, because I think when eventually negotiating with a new acquirer, they know what's going on, and they know which terms eventually they can negotiate and ask for. So I think that it's not just a tool, I would say, for acquirers, not just a tool, I would say, for the form of payment, but it's really a tool that travel merchant can access, and they can see, I would say, the full picture. How? Oh, Paul, sorry, if you go back to the previous one, how this.
This one or the previous one?
Fed, yes, this one. How the tool is working basically is that the first step is collect the data that will come via the merchant from the acquirer, from the scheme. We will have from the different, I would say, in the case of an airline, from the different, I would say, platform or IT as well provider in the case of the vouchers and so on. They will have all the information. On the step 2, there will be the input into the platform, and on the step 3, it's really output, where you will have then the full, I would say, the view on the risk exposure.
Mm-hmm. Yeah, I think you made a good point. I mean, it's platform agnostic. It's also travel supplier agnostic. So it could be an airline, could be cruise line, could be a hotel chain, etc. And also scheme agnostic, like you already said. And the idea is to bring the data together, to harmonize it, to reconcile it, and then I think what's key is to apply the logic, the business rules, and determine the status on a ticket, on a booking or a ticket level, and then bottom up basically calculate on a daily basis, because it's refreshed on a daily basis, what the total amount is and how it's broken down over the different categories, and it's how it compares to the originally calculate the amount and the collateral that's in place, and then basically helps the credit risk teams on the acquirer side, but also the teams managing payments on the merchant side, on the airline side, to visualize what the current status is, and if it's still on track, or that that some actions are required.
So Paul, one question here.
Yeah.
I think it's sort of, we've mentioned it, that it's not a heavy lift for the airline to get into this environment. What would be the first step for an airline to get their data in front of an acquirer?
One sec here.
So for the airline to provide the data.
Yes, what would be that first initiation be, and what does that entail for the airline? What sort of effort is there?
Look, and I was specifically keen on this, okay? So I really want to minimize the effort on the airline. So there should not be extra effort for the airline. So I would say not different from, I would say, the normal files they are exchanging, either from their revenue system management, or either from, I would say, the hot or direct files and so on they are receiving. I would say with that data, then the tool is really taking care of, I would say, put in order. So definitely there should be no effort and no extra work of the airline. Otherwise, we are back again to look to put in the issue on the travel merchant. Is not that what we want. And maybe Paul, you can eventually explain as well the way that is done. Different way we are doing, by the way, today. We have already airlines and we have already acquired and different type of merchants already providing the data. It's already coming from their, I would say, revenue accounting, in some cases passing the red files as well.
Yeah, files and files.
The
No, you're right, Chiara. We're trying to make it as seamless as possible for the airline, for the merchants, and make use of existing systems and processes and data formats that they output already and that they submit typically by secure file transfer to our server. We pick it up and we then merge it with the acquired data so that the acquirer can also see the status of all the transactions that they have processed on behalf of a particular merchant. And we merge in the Mastercard data as well to enrich it further. And that's the basis for all the reports. But again,
the data are coming in some of the airlines are coming also from their PSS. The data feed is coming from the PSS directly. So it really depend of the airline and depend of what is the easiest way for them.
So Paul, you mentioned earlier, smaller airlines or European airlines coming into the US having difficulty getting an acquirer on board. What would you say, or what would they need to do as a first step to get their data into this tool so that they can present it to an acquirer? Is it as simple as just reaching out to yourself and say, hey, I want to get my data in here because I'm in a hunt for an acquirer in the US?
Yeah.
Or what
yeah. So it can be multiple approaches, but if they already having conversations with an acquirer and in the end that doesn't work out because there's just not enough trust in dealing with the transactions, it doesn't pass the credit risk check, if you like. Then they can also introduce that acquirer to us, and what we can do is then basically make it completely, like I said, transparent, but also connect basically the instruction to pay out the funds, link that to a proven flown flight, for instance, that the legs all have been completed, and that there's in practice no risk for the acquirer left. I mean, because it's a black box, the acquirer doesn't know exactly when the exposure will be gone. They just don't feel comfortable enough to deal with it. If we can take that out, then and that's already being done at the moment by some of our acquiring customers. They have onboarded. It's also after the Wirecard collapse, there was quite a lot of airlines that were basically homeless, if you like. They didn't have an acquirer anymore, and we had another acquirer basically using that mechanism to onboard these airlines and to at least guarantee basically business continuity, because that's what it's all about. And you need to be able to accept card payments, especially in your direct channel, to sell flights. And without a Visa Mastercard acquirer, you lose out on 70–80% of the potential of bookings with cards. So you need to have that in place, and that's why it's crucial to find an acquirer that has the tools in place, that has the knowledge and the experience to deal with it, and that can make it work. But there are definitely options out there. But I think, like I said in my earlier comment, I think some of the existing incumbents are struggling with it, and please do reach out to us, and we'll connect to the acquirer and see how we can help out, because I think it's key for the industry that these airlines also have a channel to process and can sell these flights through their travel agency partners in the US.
Yeah, and I think can be initiated either by the acquirer or by the merchant. Get them in contact, I would say, with us, and we'll make sure that we can start either or one or the other.
Perfect. So another question just came in, and the question is, could the acquirers, as part of the contractual agreements, make it compulsory for the airlines/merchant to submit data through Actuary, or is it completely on voluntary basis?
The acquirer can, Chiara, correct me if I'm wrong, but the acquirer can do that. I mean, it's their choice to accept the merchant or not, and they can set conditions, same as the kind of collateral, the amount of collateral. In the end, it's a contractual agreement that you enter into, and by submitting the data, by using the tool, that can be made much easier. And so it's a win-win basically, because if they do submit it, then there's a good chance that they will be accepted and that the terms and conditions will be more friendly than without it. So yeah, I would say that it's definitely.
Yeah, we are not regulating definitely the agreement between the acquirer and the merchant.
No,
we are regulating most probably the agreement between us as a scheme and the acquirer. Yeah.
Yeah.
Okay. Perfect. And I mean, it's also it's sort of a benefit to use Actuary, because you mentioned it just a minute ago. It reduces the cost of doing business, right? The collateral gets reduced.
Yeah, that's the goal too.
Collateral payment terms, because just think about if an acquirer has no real-time view, if you want, of the exposure, what will happen is, and what is happening, what was happening in the industry eventually before the tool, is we're still gathering data from, I would say, from the travel merchant, eventually not on daily basis, but maybe on quarterly basis. Then with that data, they were calculating more or less an average of time gap between the purchase date and the service date, and then just in case they were adding buffer, to calculate a better protection and a better risk. Now with the real data, there is no need anymore of this buffer, okay? Because it's real data and it's what it is, and the time gap is calculated on I would say on spot. So there is no need to add any buffer. So definitely we think that by providing this data, and I can tell you with all, we have been onboarding many airlines the past months and many acquirers, we didn't get any, I would say, sense of pushback, neither from the acquirer or neither from, I would say, from the airline. I think that's been really seen and perceived as a tool that has been helping, I would say, in their relationship, and as well, directly as well, on some eventually faster payment or less request of collateral eventually.
Yeah, I think you made a good point there, Chiara. I think if you compare it to what was common before the pandemic, was typically quarterly at best, ATL, air traffic liability reports, consolidated, didn't necessarily give all the trust to the acquirer that the numbers were correct, either on purpose or not, and switching that to daily bottom-up transactions with lots more details, with the, for instance, the rules applied for expiration of vouchers or chargeback windows. It also helped, for instance, in one of our pilot airlines. Remember when we went live about 1.5 years ago, that one of the first things that happened was that when we applied the expiration window for chargebacks and for vouchers, all of a sudden a significant chunk of the existing collateral could be released, because those transactions were technically not able to be reversed to be chargebacks anymore, because they went out of the window, and that was never considered. So it is more granular, it's bottom up, all the most relevant and also the up-to-date rules are applied, and yeah, that makes it much more transparent and powerful.
Yeah, so another question for you guys. As an airline, we face the risk of a travel agency failing or going bankrupt. How does Actuary plan for this or account for this in the tool?
Yeah, if you look at, maybe Chiara can say something about the cash way of agencies paying the airlines. I think that's probably referring to this, but I think if a card, if it's a virtual card, a corporate card, or consumer card is used, the airline at the time of booking the card is authorized, and that basically guarantees that they will receive the funds. If a card is in play, then that shouldn't lead to any disruption. But I know that in cases of more like the billing system, that might be different. But maybe Chiara, you can elaborate on that.
Yeah, so it's all going back to who is the merchant of record for which transaction. Okay, so you mentioned a travel agency, so two things can happen, with a travel agency. That the travel agency will pass on the traveler card to the airline. So even if the travel agency is going bust, the travel agency, the airline will be the merchant of record of the final, I would say, consumer, and they will still get the funds. The card of the consumer has been authorized. Now, if the travel agency is acting as the merchant of record, okay, is I would say acting the merchant of record for the consumer, the card holder, and then they will do a payment to the airline, or even before doing the payment, the travel agency is going out of business. well, depends how the payment, or how the travel agency did the payment to the airline. Because if eventually the travel agency use a card, even if the travel agency is going out of business, the moment the transaction has been authorized, the funds will go to the airline. Right? So, the protection with the card there is in both, I would say, in both directions, to the merchants and I would say to the cardholders. So this is very important. Now, if the travel agency is using another form of eventually of payment and there is no, I would say, guarantee, well, then it's eventually a bit of a struggle. Okay, so but what they need to understand is really who is the merchant of record and what is the form of payment they accept for that transaction.
And that's also the approach that we take if you look at travel intermediaries, corporate travel agencies, TMCs, OTAs. See how did they pay? So what kind of mechanism do they have to actually get to pull back the funds in case the service is not delivered? But like Chiara said, it also works the other way around. If the card has been used to pay, then also the supplier is guaranteed that they will receive the funds because that money is guaranteed by the issuer.
Thank you. Yeah, another question is there a list somewhere or a web page where the airlines or anyone can go and see which acquirers are already available in Actuary?
Well, there is not a page as such, but if they contact us, we can tell them. Okay, if the acquirer is already using the solution and so on. Yeah.
Okay, thank you for that.
Okay, I think that was the last question for now.
I think so, Paul. Do you guys want to do a quick summary?
Yep. Yeah, I think we can go to the top of the hour.
To notify airlines when there's a spike in transactions coming through, either account and or an amount. So we have scenarios in which the travel agent is issuing tickets in which all the flight segments are on Airline A, and yet because Airline A revoked the travel agency's ticketing authority, they go and validate Airline B. So the funds all go to Airline B when they have no lifting segments. And through the interline process, the money initially obviously goes to Airline B, but interline goes back to Airline A. But we could all see there a giant amount of risk for Airline B because they're the merchant of record. And would your system catch something like that and flag it, alert it out to Airline B?
Mm-hmm. Yeah, that's a very interesting question. I must say that this is work in progress. We built the system from scratch. Basically, it's pioneering, and every time we find new use cases or new ways that we can help the community with creating overviews or alerts and this I've not come across this one yet, but I think it's a bit similar to concentration risk. If for instance the travel agency is the merchant of record, and all of a sudden you see that supplier A, which is normally 2%, all of a sudden gets like 25%. I mean that should also set off an alert, right? Because there could be something fishy going on there. And I think this particular case that if we we do pick up the HC code, for instance. So if there is a need for an additional dashboard or a report or an alert that identifies a certain potential risk, then more than happy to look into that and to add it, because in the end it's the community, the users that drive, I say, functionality, together with scheme rules and IATA, etc. To make sure that we capture the right kinds of risk and feed that back to the users.
Thanks, Paul.
Okay. So maybe we can take this offline, and you can explain to me again in detail exactly what we're trying to achieve, and I'll take it forward. Yeah.
I'd be happy to. Appreciate it.
Okay. Yeah. So Chiara, I think we have 5 minutes left, so I just put on this one again to see if there's anything left that's worthwhile discussing. I think we touched on a lot of topics. Maybe not on. I think you briefly touched on the use of alternative collateral mechanisms like trust accounts and insurances. Is there anything else you would like to share about that?
No, I think we are happy to, I would say, to explore and to continue exploring the different solutions that can be, I would say, used and provide more confidence, okay, into the ecosystem. So we are continuously exploring alternative, but happy to, you know, if there is any specific case and so on, happy to discuss.
Yeah. Okay, because in the end, I think the ones in green here are data, right? You know, making sure that everything is collected and harmonized and presented. The other one is flexible remittance, making sure that the remittance is aligned with the actual risk and the exposure. And then, like you said, the alternative collaterals, you know, next to a cash holdback or a bank guarantee or another form of bond, have a intermediary account with a trusted third party that will then manage the flow, the release flow to the merchant, the escrow account or the trust account, and hopefully we'll see a return of insurance coming back into the market that will also make it possible to pay a premium and then to for the acquirer, for instance, to receive funds in case this trigger scenario happens. If, for instance, the airline stops operating, that they can then get a payout from the insurance company. Yeah, there are a couple of other things I'll leave for another session. I think if there are no other questions, Doug and Cornelius, then I would like to thank Art for having us and for sharing the platform with us, and hopefully we can assist you guys as well into the future in helping both your travel agency and your airline members and customers.
Thank you very much, Paul and Chiara. It was great having you.
Thank you.
Participating with us here today. Just a reminder for people on the call, there's another webinar next week around the turbulence of cybercrime and fraud in aviation. It's going to be presented by the Aviation ISAC team. So definitely another informative session there. But again, Paul, Chiara, thank you very much for sharing with us today Solution and Actuary, and we'll be in touch.
Thanks to you and the attendees.
Thank you.
Thank you.
Thank you.